In this presentation, we will discuss period end adjusting entries related to our job cost system within QuickBooks Pro, QuickBooks Desktop. Here we are in our practice problem 2. We have the open windows open. You can open the open windows by selecting the view dropdown and the open windows list. Now we're going to consider those period end adjustments we may want to do in order to convert our numbers into whatever basis that we need to convert that into. Percentage of completion, the accrual method, or a completed contract type of method. So in order to do that, let's pull up our reports. We've got the reports drop down. We're going to go to the accounting and taxes. We're going to take a look at the trial balance. Within the trial balance, we'll change the dates up top from 01/01/20 to 12/31/20. So this is going to be our trial balance. We're concentrating in on the cost of goods sold account and the fact that we're not recording a work in process account. What if we wanted to adjust for that at the end of the year and just simply make that adjustment for us? The other report we want to consider for that is going to be the reports up top. We're going to be looking at the job report, and we want to take a look at the job versus actual summary report. There we have it. And so we could see that one job number 14 is closed. We've got these other two jobs that are open. Now, if we consider this from our Excel worksheet, let's think about it from an Excel side of things. We're going to be on the last tab, and we have our same scenario here. You'll recall that these red accounts are the ones that we did not use. So on more of an accrual basis method, we would be putting this information into the work in process, then transferring it to finished goods, and then the cost of goods sold, which means we'd have to track it through that process. Here we're recording it to cost of goods sold, and then we're recording the sale at the end. So it's just a timing difference that's going to happen. Therefore, we have items related to cost of goods sold where the job has not yet been completed because we've been recording them as they have been incurred. What if we want to put this more on an accrual basis? How can we do our job reports to basically reverse this? In other words, if we have the system set up in this format, that's fine. And then if we need to make an adjusting entry in order for taxes or for year-end adjustments, or to adjust in order to get a loan or something, some kind of thing that we need to get an adjustment for, can we then do that? Is it possible? Well, that's the same kind of adjusting thought process you'd want to go through with any type of system, right? Is this system working well for us, and then what kind of adjustments do we need to do periodically? Those are what normal adjusting entries kind of do. So in this case, we would say, all right, well, if I want to make this on an accrual basis, the thing is I need to take this work in process account and put it up to what it should be in accordance with those jobs that aren't completed. So if we're saying if our assumption then is all jobs that are not completed should be going into the work in process account. So we need to increase the work in process account by that amount. So if we go back over here, we'd say, all right, this job is closed. These two jobs are still open. So what should still be in the work in process account? These two jobs. These two jobs should still be in work in process. So that's going to be our journal entry. We know that the work in process needs to be going up by this number and this number, the open jobs, the 565,860. So if I go back over here, then that's going to be the debit, the 565,860. Now the other side of that, if I increase the work in process, is cost of goods sold. Those are the two accounts that are linked together. However, some of that job might have been there in the beginning of the time period and had been closed out to the capital account. That's why we need to know that beginning balance. That's why we need to know this basic reconciliation process in order to do this adjustment at the end. So we see here that we have the total jobs, we have the trial balance, and this 83 represents the open jobs at the end of the time period that we had to account for in order to reconcile to the cost of goods sold here. So that those open jobs are what should be posted to the equity or capital account, because those jobs basically were open at the end of last year. We put it to cost of goods sold. They closed out to the capital account. The cost of goods sold did, even though the jobs had not yet closed, right? So we need to adjust the retained earnings in, or the capital or equity or whatever you want to call it, the equity section, and that's going to be adjusted for that 83,000. So that's why we need to do that 83,000 if we need this adjusting entry process at the end to do that. And then the difference is going to be the cost of goods sold. In other words, the 565,860 minus the 83,000 is the cost of goods sold, the amount of the current time period that went into cost of goods sold, which now we're going to be capitalizing or putting on the balance sheet. It's going to be that for 82. And then, so let's record this and see what happens. If we go back down and we say, all right, let's record this last transaction. We're going to say up in the work in process, I'm going to say this equals the 565,860. The capital or equity section is going to be this 83,000, and then the cost of goods sold is going to be equal to this 482,860. And that would make sense because what does that leave us with? It leaves us with the 191 in the cost of goods sold, and the cost of goods sold for the current time period should be the job that was completed in the current time period, which is going to be the 191. So that's what's going to be left in the cost of goods sold. The other two jobs that have been moved out here. So those two have now been moved out. So the cost of goods sold ties out, the others ties out, and then the retained earnings then would make sense as well. If you look at the prior problem, this retained earnings will tie in to basically the retained earnings of the prior problem. So we had some differences in basically our allocation of the factory overhead with the percentages here from the prior problem. So if you want to compare the two, you can there. So you could do that same thing within QuickBooks with the reports. So if I needed to take these reports then and adjust this to basically an accrual basis periodically, and then possibly reverse it, or even just do it for tax purposes or reporting purposes of some kind, then you could take these reports and do so. So if we take a look at the job versus actual summary report, we have the job that is going to be closed, and then the two jobs that are still open, which means, of course, that means that the jobs that are open should be in work in process. So we can provide this report and say, hey, look, this 131,490 plus the 250,880 of this amount, that's going to be the 565,860. That's the amount that should be applied out to work in process because they're still work in process. Then we can consider basically the amounts from that 83,000 at the beginning of the time period by running the report for the dates 12/31/19, the prior period 12/31/19, and that's going to give us our 83,000. Should be adjusted to basically retained earnings, right? Because these were going to cost of goods sold, closed out to retained earnings or capital or equity or whatever you want to call it. So then, and that would give us the numbers that we would need in order to make that adjusting entry. So I won't record the adjusting entry in QuickBooks here. How you would do it is you'd go to the company file, and then you would go to the make journal entry and simply record the adjusting journal entry related to it. Then you may want to basically reverse it. The point here is that no matter what happens for taxes, you might have different methods that you need to basically be using for the end of the period adjusting entries. And once that happens, which may just be at the end of the year, you want to be able to provide the reports so that those adjustments can happen. So if you can reconcile out the reports, no matter what system you are using, you want to be able to reconcile out the reports so that those adjustments can be done easily.